Welcome to the Explainer. You know, if you're looking at the market right now and feeling a little lost, you are definitely not alone. It's like we're getting all these signals and they're all pointing in completely different directions. We've got central banks clashing with politicians, a massive AI boom that kind of looks like a bubble, and crypto? Well, crypto is just caught between insane hype and some really worrying data. So let's try to make some sense of this maze. So let's just kick things off with a number, a really, really big number. $1 trillion. Now, this is the reported size of a planned investment coming into the U.S. from Saudi Arabia. It's just a huge injection of cash that adds yet another layer of complexity to an already pretty confusing picture. All right, so here's how we're going to break this all down today. First, we'll get a read on the overall economic climate. Then we'll look at how politics is putting the squeeze on the Fed. After that, we're diving into the AI gold rush, and we'll wrap things up in the wild, contradictory world of crypto. First up, let's zoom out and take a look at the big picture. What's the economic weather like right now? Well, there are a few key things everyone's watching, and they're definitely not all telling the same story. Okay, so there are a few major tensions at play. First, you've got these indicators like PMI, which basically measure business activity, and they're giving really mixed signals on growth. At the exact same time, all eyes are on the central banks, waiting for any hint of a rate cut. The problem? Inflation is proving to be stubborn or sticky, which might mean these high rates are here for the long haul. And simmering under all of that, you've still got geopolitical friction adding a whole other layer of risk. Now, as if that balancing act wasn't tricky enough, let's throw some political drama into the mix. See, the U.S. Federal Reserve is supposed to be independent from politics. That's kind of the whole point. But right now, that very independence is being challenged very publicly. I mean, you can't get much more direct than this, can you? A public statement about wanting to replace the head of the Fed. That just injects a massive dose of uncertainty into everything. It makes you question the entire future of U.S. monetary policy, which is, kind of the foundation of the whole global financial system. And then this follow-up just doubles down. It signals that this isn't just some off-the-cuff remark, but that a plan might actually be in the works for a big leadership change. And for markets that absolutely depend on stability and predictability, that kind of ambiguity is just poison. So while all that's going on with the traditional institutions, there's this tidal wave of money and hype flooding into a brand new area, artificial intelligence. It's driving some huge gains in the market, but it really makes you wonder, is the excitement getting way ahead of the reality? The pace here is just staggering. You've got the tech giants in a full-blown arms race, each one making these monumental claims about their AI models. And of course, that's fueling an investment frenzy because nobody wants to miss out on what could be the next massive technological revolution. But, and this is a huge but, there's a catch. This right here perfectly illustrates the other side of the coin. For all this incredible software that's being built, it all runs on physical hardware that can and does fail. A single outage at one company, Cloudflare, can bring huge parts of the AI world to a grinding halt. It's a stark reminder that this whole boom is built on a foundation that's still surprisingly fragile. So you put all that together, the incredible hype, the billions of dollars pouring in, and this underlying fragility, and it leads to the billion-dollar question that everyone's asking. Are we watching a true technological revolution unfold, or are we just inflating a massive speculative bubble that's about to pop? And finally, let's jump into the one market where the signals might be the most conflicting of all, cryptocurrency. Right now, the gap between these really bold predictions and the cold, hard data is just wider than ever. On one side, you have the true believers, the mega bulls. This quote from an industry heavyweight pretty much says it all. This is the narrative, right? A story of digital scarcity, of inevitable, explosive growth. But then you look at the technicals, and this tells a completely different story. The daily reading is a strong sell. A key price level has already been broken. The trend is bearish. This isn't someone's opinion. This is just what the chart data is suggesting. And it flies directly in the face of those hyper-optimistic predictions. And if that wasn't confusing enough, let's talk about the watchdogs. The SEC, America's top markets regulator, used to have crypto listed as a top priority, a special risk area. But in their latest list of priorities, crypto is gone, not a single mention. So, is the watchdog backing off or just looking the other way? But just as one regulator seems to step back, another one opens a door. A different U.S. banking regulator has basically given banks the green light to hold crypto for operational reasons. It's a subtle move, but it could be a huge signal for mainstream adoption, like a little green shoot of legitimacy in a whole field of regulatory confusion.
So where does that leave us? Pretty much stuck in a market maze. We've got the old economy fighting high rates and political pressure, a new tech boom that might be a bubble, and this digital frontier that's battling for legitimacy. The signals are all crossed. And the biggest question isn't just where the smart money goes next, it's whether the old maps we've been using even work in this new territory.